Welcome to our Beginner Investor Guide. Whether you're just starting out or looking to gain a better understanding of investing, you're in the right place. Today, we'll explore the basics of investing and why it's crucial for your financial future. Investing is not just a way to grow your wealth, it's a key component of financial literacy and security. By learning to invest wisely, you can make informed decisions that will benefit you for years to come. In this series, we'll break down complex topics into manageable steps, ensuring you feel confident in your ability to invest. From understanding types of investments to setting financial goals and building an effective strategy, we've got you covered. Investing may seem daunting at first, but remember, every successful investor started with the basics. As we dive deeper, you'll see how investing can help you achieve your financial goals and secure your future. We're excited to embark on this journey with you. Stay tuned as we uncover the foundational concepts that will set you on the path to successful investing. Let's get started today. Financial literacy is the foundation of smart investing. Yet many people lack this crucial knowledge, leading to poor financial decisions and missed opportunities. So, what exactly is financial literacy? At its core, it involves understanding how to manage money effectively, covering topics like budgeting, saving, investing, and debt management. However, misconceptions abound, with some believing that financial literacy is only for the wealthy or those with a formal education in finance. This couldn't be further from the truth. Regardless of income or background, everyone can benefit from improved financial literacy. The impact of financial illiteracy is profound. People make uninformed decisions, fall into debt traps, and miss out on the benefits of effective investing. Over time, these missteps can lead to financial insecurity and stress. As we progress through this guide, we'll demystify these concepts and equip you with the knowledge to make confident, informed decisions. Stay with us as we delve deeper into the world of investing and build a solid foundation for your financial journey. Investing is the act of allocating resources, usually money, with the expectation of generating an income or profit. But what exactly is investing, and why is it important for you? Investing allows your money to grow and work for you over time. Now let's dive into the different types of investments you can make. From stocks and bonds to mutual funds and real estate, each option comes with its own set of benefits and risks. Understanding these can help you make informed decisions. Speaking of risks, it's crucial to comprehend the balance between risk and reward. The higher the potential return, the higher the risk you'll face. Conversely, safer investments often yield lower returns. Striking this balance is key to a successful investment strategy. As we move forward, we'll explore how you can set achievable financial goals to guide your journey. Setting clear financial goals is the cornerstone of successful investing. Goals give your financial journey direction and purpose. But how do you set effective goals? Start by differentiating between short-term and long-term objectives. Short-term goals might include saving for a vacation or building an emergency fund, while long-term goals often focus on retirement or purchasing a home. To make your goals more achievable, follow the SMART goals framework: specific, measurable, achievable, relevant, and time-bound. For example, instead of saying, "I want to save money," specify the amount and the deadline, like, "I will save $5,000 in 1 year for my vacation." This transforms a vague intention into a concrete plan. The clearer your goals, the more likely you are to achieve them. Precise, actionable objectives help you stay focused and motivated, making it easier to track your progress and make informed adjustments along the way. As we move forward, you'll learn how to build a robust investment strategy that aligns perfectly with these goals. A well-rounded investment strategy is essential to achieving your financial goals. It starts with diversification, spreading your investments across different assets to reduce risk. Next, consider asset allocation, which means distributing your investments among various categories like stocks, bonds, and real estate. This method balances risk and reward according to your comfort level. Understanding your investment horizon is crucial. Your investment horizon refers to the length of time you plan to hold your investments before needing the money. Short-term goals require different strategies compared to long-term goals. Proper diversification spreads your risk, so one poor performing asset doesn't severely impact your entire portfolio. Appropriate asset allocation aligns your investments with your risk tolerance and financial goals. By integrating these principles, you'll create a strategy to help you navigate market ups and downs while steadily working towards your goals. Next, we'll discuss how to open an investment account best suited to your needs. Navigating the world of investing begins with understanding the types of investment accounts available to you. There are many options, each designed to offer unique benefits. Some accounts offer tax advantages that can help you maximize your returns. From Roth IRAs to 401ks, knowing the tax implications and benefits of each type is essential. Moreover, choosing the right account that aligns with your financial goals and investment strategy is crucial. For example, a traditional IRA might suit those looking for an immediate tax break, while a Roth IRA is beneficial for those who expect to be in a higher tax bracket at retirement. Consider factors like contribution limits, withdrawal rules, and investment options when selecting an account. Your choice can significantly impact your financial future. So take the time to research and select the account that best fits your needs and goals. As we proceed, you'll learn about common mistakes to avoid and the tools that can help you succeed in your investment journey. Even seasoned investors make mistakes, and it's crucial for beginners to be aware of these pitfalls. One of the most common errors is emotional investing. Letting your emotions drive your decisions can lead to impulsive buys or sells, often at the worst possible times. Another frequent mistake is a lack of thorough research. Investing without understanding what you're putting your money into can lead to poor returns or significant losses. Many also overlook the fees associated with investing, which can slowly erode your returns over time if not carefully managed. It's essential to stay rational, do your homework, and always consider the costs involved. As we move forward, you'll see how to leverage tools and resources to avoid these common investment pitfalls and grow your financial knowledge. Investing can be overwhelming, but the right tools and resources make all the difference. Begin with investment apps designed to help you manage and monitor your portfolio with ease. These apps offer user-friendly interfaces and real-time updates, perfect for the novice investor. Tap into the wealth of educational resources available online. Websites, blogs, and forums are excellent places to learn about market trends and investing strategies. Financial advisors play a crucial role in guiding your investment journey, offering personalized advice tailored to your financial goals and risk tolerance. By leveraging these tools, investment apps, educational resources, and financial advisors, you can build a solid foundation for your investing journey. Next, we'll guide you through opening an investment account and making your initial investment, a pivotal step in transforming your knowledge into financial growth. Utilizing these resources effectively can boost your confidence and competence as an investor. The first step in your investing journey is often the hardest, but it's the most crucial one. It's time to open an investment account. Don't worry about starting big. Even small amounts can make a difference. Just begin. With your account open and your first investment made, the next vital step is to stay informed. Keep an eye on your investments and continue learning about market trends. Remember, it's not about perfection, but progress. Each action you take brings you closer to financial empowerment. As we move forward, you'll see the final steps to solidify your investment journey. We've covered a lot today, from the fundamentals of financial literacy to taking those important first steps in your investment journey. Remember, investing isn't just a one-time event. It's a continuous process of learning and growing. Each step you take brings you closer to financial freedom. Think about the importance of setting clear goals, building a robust investment strategy, and avoiding common mistakes. Utilize the tools and resources available to stay informed and make educated decisions. If you're feeling inspired, now is the perfect time to put your knowledge into action. Open that investment account, start with what you can, and keep moving forward. Every bit counts. Don't forget to subscribe to our channel for more insightful tips and guidance on your path to becoming a savvy investor. Thank you for joining our beginner's guide. We're excited to see where your investment journey will take you. Until next time, keep learning, stay motivated, and invest in your future.